the first time in a long time that the monthly employment rate really didn't matter much to markets today. It's Friday, April the 4th, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell, share it with friends, family, or colleagues. But we're coming to you today to give a little bit of a recap on the monthly employment report that we received this morning. When we look at the amount of jobs that were added to the U.S. economy, it was better than expected, 228,000 jobs in March, which was up from the expectation of just 140,000. But when you dig into that, you do see a net 48,000 jobs that were lost over the prior 2 months. So there were downward revisions. The unemployment rate did rise slightly from 4.1 to 4.2. And when you look at that, the labor force participation rate actually rose to 62.5. So we saw a pretty big increase in the household employment survey, meaning people coming back into the labor force. Now, where were the jobs concentrated? We did see quite a bit in the trade and transportation, private education and health, and then we did see, surprisingly, an increase in the leisure and hospitality. I know there's some questions around when we'll start seeing the loss of the federal government jobs. Right now, we're not seeing too much of it. We've only lost 15,000 over the past 2 months. Temporary help, this is a kind of a precursor of what we may expect in the labor market, because you'll lay off temporary help before you'll lay off your permanent employees, and that was lower again for the second consecutive month. The average hourly earnings actually came in as expected, rising 0.3 for the month, but the year-over-year level is now rising just 3.8%, which is the lowest since July of 2024. And that's something the Fed's going to watch, because when you look at wages growing, 3.5% to 4%, yes, this is, better and good for the labor market, but also can create this wage pressure spiral. So the Fed's watching that closely. The market is moving not at all in this labor market report. We've got another down day in the equity markets, and this is primarily driven by the fact that we have some retaliatory measures taken by China today on our tariffs. So we're still in this tariff tornado, I guess you could say. Uncertainty still is the big theme in the markets. Now, we'll be back next week. We'll come back with impact reports as we see fit. And I know there's probably going to be some negotiatings or headlines over the weekend over from the tariff perspective. But we also have a big week regarding inflation. We'll get CPI and PPI, as well as the meeting minutes from the Fed's March meeting. Thank you very much. And if you want a further history of our podcast, you can go to marketswithmegan.fm. Thank you.